Oil could see the $40 level as the Iran nuclear deal comes onto the books. You know what, Dan, as the fundamentals could not be any more stretched with crude at this point.
Yeah, I think that that's right. I mean, this is one thing that we sort of half figured on. But in many ways, I've seen a lot of the analysts over the last 24 hours talk about the impact on oil because of the Iranian deal in sort of a very kind of nonplussed kind of manner, not really concerned about what's going on with Iran. And I think they're all wrong. I think the Iran deal is going to make a big difference into the oil market, and exports is why. If we look at the numbers from Iran, most people are looking at production numbers, and production numbers have gone down from 2011 when sanctions were increased about 900,000 barrels a day. And what they think that they see is that when the sanctions come off, the little bit of oil will come back into the market, maybe another 500,000 barrels a day. But in terms of exports, exports have dropped from Iran since 2011 by 50%. So, and that's been a total of 1.2 million barrels a day. And that really is the number that matters, because that's the amount of oil that's not being used internally. It's the amount of oil that's actually hitting the global supply chain. And when we talk about Iran and the removal of sanctions, it will not take much for a respooling of those exports to begin, mostly to the east, into India and into China and into Japan. And you put another 1.2 million barrels on a market a day that already has a glut of about 1 million barrels a day, and you're going to get oil dropping down again back into the 40s. So
this is something they can put back online relatively quick.
Indeed. Remember, this is before you get the kind of Western involvement in oil production in Iran that most people are long-term expecting, and in some ways they're expecting that to be the driving force when the Westerners come in and start to help Iran with production that they haven't had for decade now or more. And they're expecting that this nuclear deal brings a whole rapprochement with the West and so on, and that delivers that kind of Western infrastructure help into production. And that's really the long term that people are thinking is going to increase the numbers coming out of Iran. But it's not true. And even in the midterm, in the very short midterm, these are numbers that the Iranians can put back online from 2011. You know, these are nothing new. These are self-contained production ability in terms of exports that the Iranians can put online practically.
But even outside of Iran, what's happening domestically, we're not even seeing the drawdown in the products that we should be seeing now in the summer demand season, and the shoulder season's just a couple months around the corner.
Indeed, Iran is only another of what has been, I think, a perfect storm of bearish numbers. And why, I will take, a little bit of a curtain call with you. We've told people for weeks, do not buy this rally. This is going to be a W recovery. We're going to see another dip. I do not think we're going to break the lows again, but the numbers we're looking at least the ones that I'm looking for, are again in the low 40s that we saw in the early spring this year.
All right, thanks very much, Dan.
Right.
For TheStreet in New York, I'm Jill Malandrino.